Hello everyone. This is going to be educational video number 4. We are going over open gaps today and gap theory. So for any of you who do not know what gap theory is when we have open gaps, okay? And the gap theory rule is 80% of the time when there is an open gap, it will fill, okay? So any open gap you see, high probability, 80% of the time it will fill. Now, it's not guaranteed, but again, 80% of the time those gaps will fill. Now, once those gaps fill, 80% of the time, the stock or ETF or whatever it is will reverse, okay? So again, 80% of the time gaps fill. Once they fill, 80% of the time the stock will reverse. Okay. Now, what makes an open gap? Okay. Now this is Amazon. I'm using Amazon chart for a reason. The gaps, Amazon trades extremely well on gaps. I know traders who just look for gaps to trade. They're gap traders. That's all they do. So what makes a gap? Now, if I go back here to the earnings on this gap, a gap is made when a stock opens below or above the prior day close. So here that day Amazon closed there and it opened up down here on the earnings announcement, okay? So that's what makes a gap. Gaps do not fill in post or pre-market hours, okay? A lot of people think they do, but they don't. Okay, the gap needs to fill on the chart. If a gap is filling before the market and by the time the market opens, the gap isn't filling, it'll still show up on the chart. Okay, they don't fill in futures or post or pre-market. Okay, so you can see here on the chart, on the Amazon chart, I have 7 gaps circled. Okay, now there might be some other smaller gaps. I'm not paying attention to those. Just for this video, I'm going to highlight the larger ones. Okay, so what I'm going to do is we identified the gap, and I want to see what happens when these gaps eventually filled. Okay, now sometimes the larger the gap, the longer it takes to fill. Okay, the smaller the gap, those could be good trading opportunities for short term. So if I'm looking at this gap here, okay, this gap filled not until the earnings announcement, okay? And what happened on that gap fill, we can clearly see it reversed and went higher, okay? So this gap did fill, and then Amazon reversed and went higher. So we can clearly see that, okay? So chalk this one up as a gap fill reversal, okay? Moving on now, here, okay, it's kind of hard to see maybe, but this gap here, okay, filled on that red candle. And then what happened after it filled? Amazon went up. Okay, you can clearly see that. This gap here, okay, which is circled, this gap filled on that green candle, okay? And what happened to Amazon? Went up, okay? So you could see the theme here, what's happening. This open gap, okay? This open gap filled on that red candle, and then what happened? Amazon went up, okay? I'm going to leave this gap here for the end, okay? So there's a reason for that. And then so we can see here the Amazon gap from earnings, okay? That's a big gap. And surprisingly, this gap filled fairly quickly, to be honest, okay? We can see this gap here filled on that green hammer, Okay, remember hammers at tops lead to reversals. So this gap fills on that green hammer and then Amazon reversed and went lower. Okay, now by doing this, this gap filled here and Amazon went up. It bounced. Okay, and then finally I left this gap last for a reason because this gap did not fill until here at the end of the chart. And then we saw Amazon went down. Okay. So here we have 7 open gaps that I've highlighted and have gone over, showed them filling and showed the reversals. So these were 7 and 0 if you would have traded those. Okay. You could have traded the gap. You could have traded the reversal, and that actually would have been 14 and 0. You would have had 14 winning trades. Okay. And how do people trade these? Okay. So, let's just take this last gap here for an example on how people trade them. And we can even take this gap here as a trade. So, let's say Amazon was over here. You saw this gap fill reversal, and now you were eyeing this gap here. Okay. Once a trader sees the gap fill, okay, they're going to take calls, okay, for that reversal up. Now, if someone is riding this up, where do you think that trader is going to be looking to maybe exit those calls? Okay. He's going to be looking at this open gap, which is still there. Okay. He's going to be looking to exit, maybe even before the gap fills. Okay. He's going to be looking to exit his calls. Okay. Why? Because again, when gaps fill, 80% of the time they reverse. I mean, who knows? Maybe that trader would want to buy puts here on that gap fill reversal. Okay. So that's how you trade the gaps. That's how gaps help you to get out of a position. Okay. If, let's say you're buying puts up here and there's a gap below. Okay. Or let's say you're buying puts here on this resistance level. Okay. And that gap is open. So, if that gap fills, then stock Amazon could reverse. So if you grab puts here, I would be eyeing that gap as my exit on the puts. Why? Because look what happens. It can reverse. So gaps are very, very important. Even if you're not going to trade gaps, gaps are very important for your trading because they can give you entries and they can give you exits. Okay. Like if you were in Amazon or you're trading Amazon for the earnings and you saw this gap filled way back here. Okay. You might say, hey, that gap just filled. Amazon like me to bounce, which it did. Okay. So again, gaps are very important. Even if you don't trade them, they're very important for your trading, identifying them, seeing them. If you're getting in a trade and if you're buying calls here, you're getting in a trade, that 80% of the time if that gap fills, the Amazon stock will be drawn to that gap. Okay. So very important again to identify the gaps, use them for your trading when you get in, when you get out. Okay. They're very accurate. Now, again, nothing's guaranteed. 80% of the time they work. 20% of the time they don't. So just be mindful of that. Everything in technical analysis. Okay. 80, 90%, those are very high probabilities, but again, they're not guaranteed. So practice. I've said it before, the more charts you look at, the better you're going to get, at reading charts, analysis, spotting the gaps, using those gaps. And again, all you have to do is go back on the chart like I'm doing here and seeing how gaps have done. Okay. Maybe some stocks don't trade well on gaps. Amazon trades extremely well on gaps. So hope this video helps. Again, we will be coming out with more educational videos as we go. So look for those. And as always, good luck trading. Take care.